Good morning, everyone. Sure you had a blissful weekend. You're welcome to a new trading week. Pray that this week shall be a profitable week for every one of us. The Lord has made it possible for us to see this week. He's also going to make it a glorious one for every one of us. So I'll start by looking at the calendar for the week, also analyze DXY and yen basket. So this week, as you can see, we have a lot of red folders, a lot of high impact news from the different countries, as you can see. On Monday, there are no major news. Today, Monday, no major news. Tomorrow, Tuesday, February 17th, Great Britain will be releasing its claimant count change. So if you are considering trading GBP pairs, you should wait for this news to be released before you trade on GBP pairs. Then CAD also will be releasing its consumer price index data by 1:30 p.m. Nigerian time. So if you want to trade CAD also, CAD pairs, you should wait for this news to be released. Then on Wednesday, February 18th, New Zealand will be releasing its official cash rate, monetary policy statement, and rate statement. And also there will be a press conference on Wednesday between 1 a.m. and 2 a.m. That's when New Zealand will release this major news. So you want to be careful trading New Zealand pairs. Then on Wednesday also, Great Britain will be releasing its CPI news, CPI data. Then 7 p.m. is FOMC meeting minutes. I would advise you avoid US dollar pairs before FOMC meeting. I'm not going to trade US dollar pairs until after FOMC meeting is released. Okay. And if you want to trade USD pairs, GBP pairs, CAD pairs before the news is released, I've always advised that you should be very conservative. You should risk less when a major news is expected from a country. You should risk less. Very important. Don't go in aggressive. Wait for the news. Excuse me. Wait for the news to be released before you you take a trade on the pair. Then on Thursday, Australia will be releasing employment change, unemployment rate. United States will release unemployment claims. And by 11 p.m. also, Governor Berman will be speaking. That's Governor of the Bank of New Zealand. Okay. Then Friday, Great Britain retail sales, Euro German flash manufacturing PMI, flash services PMI. Great Britain also releasing flash manufacturing PMI, flash services PMI, advanced GDP. That's from United States, copy C. All these news are high impact news, so should expect high volatility in the markets this week. And when there's volatility in the market, it offers opportunity to make good profit, but it also comes with high risk. It comes with high risk. When there are a lot of major news like this to be released, you see a lot of spikes in the market. That is expected. So please, if you're trading this week, please be conservative. Don't risk what you can't afford to lose. It's very important, please. Don't risk, no matter how good the setup is, never risk what you can't afford to lose. Whatever risk you take in the market, you should be very comfortable with the risk. And I did advise that you shouldn't risk maximum, your risk should not go above 2%. 2%. This week that we have several major news, your risk should be between 0.5% and 1% of your capital. You should not exceed that. This week that we have a lot of major news to be released. Now, if you look at what we have here, this calendar, we don't have news for Swiss franc. We don't have news for yen, no Swiss franc, no yen. So you might want to consider trading maybe CHF Okay, CHF one of the pairs you might consider trading to avoid all the spikes that we might experience on dollar pairs, all these currencies that have major news. CHF there's no news for those two currencies. So you might want to consider trading them. Good morning, Mr. Chibuzo and Mr. Sam. I can see you. Thanks for joining. So I'll take questions after the analysis. So that's it for fundamentals. Then let's see dollar index. It's very important that you look at the trend, not the trend for the dollar before you take trades on dollar. So let's start with the weekly time frame. Weekly, okay. So last week candle closed strongly bearish. But 2 weeks ago, we had an AMA candle form here, and an AMA indicates changing trend from bearish to bullish. And that AMA was used to sweep. You can see the liquidity that was residing at this relative equal lows. Okay, at this relative equal low. So right now, the buyers are still in control. The buyers are still in control. Would only consider selling if price breaks this this low. That is when one might consider, selling the dollar. In as much the market is still trading above these lows, should be considering buying. And where will be the next draw on liquidity? Where will be the next draw on liquidity? Should be considering this high. This is the buy side liquidity, and also this fair value gap that has not been filled. That could be the target for the dollar this week. So this is the buy side liquidity, and this is the sell side liquidity. Okay, so it's either price breaks out from this low, comes for this liquidity, or it goes for this high and also fill this fair value gap. That is what is going to play out this week. That's what's going to play out this week. Price will always go for liquidity, either the sell side or buy side. So as a trader, all you have to do is just identify those levels of liquidity and set your targets at those. You either go bearish if you see a bearish pattern, go bearish, aim for the sell side liquidity. If your setup is bullish pattern, you go like what we have here is a bullish pattern. We are going for the buy side liquidity. That should be our focus. Okay, because the pattern we have here is a buy side, is a buy pattern. So we are interested in going bullish and not bearish. Okay, so that's it for the dollar. Let's see what we have on the daily time frame. On the daily time frame. Okay, so you can see the pattern we also had on a daily time frame. Now, what do we have here? This was on Tuesday, Wednesday, Thursday, Friday. Yeah, Tuesday, Wednesday, Thursday. You can see all the patterns that formed here are bullish reversal pattern, though the bodies of the candles are bearish. The bodies of the candles are bearish. These are bullish reversal pattern. We had an AMA, we had a doji, we had a spiny candle, we had an inverted AMA. All these candles indicate change in trend from bearish to bullish. Now, apart from that, you can see that price pulled back here. First, it pulled back to a discount area. You apply a Fibonacci from this swing low to this swing high. Now, if you have the software, you don't need all this analysis. Just follow the buyers on the software. But it's very important that you also know all these basic things. It's very important. Okay, so that if the software is not even there, you can still at least know the direction of the market. That's why I'm doing all this. I can just go ahead and just tell you, how I can just go ahead and just use the software without doing all this. But I still want you to understand all these basics is very important. So that when people ask questions, please, you should be able to explain to them what Forex business entails and how they can analyze the market, not just to just show them software that this is this, this is that. Okay, so you can see price has pulled back to a discount area. You can see that pulled back to a discount area, and there was a strong rejection from the fib level 0.5, 50%. You can see, and also you would see that that move was used to fill this fair value gap here. See, it was used to fill that fair value gap. So if today's candle closes bullish, if you don't want to trade USD pairs today, if today's candle closes bullish, that will be a strong confirmation for buys. If today's candle closes bullish, that will be a strong confirmation for buys. Remember, when you have bullish reversal pattern as we have it here, and the bodies are bearish, you are advised to wait for a candle to close bullish to confirm that there are buyers in the market, right? So it's today's candle that will confirm if there are enough buyers, there are enough demand to push price up. Okay, and I'm sure they might want to use all these highs, okay, because there are a lot of stop losses residing at this previous high. They might want to use them as liquidity and also use the opportunity to fill this fair value gap here. Okay, so if they fill this fair value gap, price breaks out from this resistance, still have a fair value gap here that has not been filled completely. This fair value gap has not been filled completely, so they might use that opportunity to fill that gap. So that is what I see playing out on the dollar this week. Okay, technically, this should play out. Technically, the dollar should be bullish. The only thing that will make dollar sell this week is if the major news, the fundamentals, does not favor the dollar. That is when we will see a bearish move on the dollar. But technically, dollar should be bullish. Dollar should be bullish. Okay, so let's look at JPY. JP yen basket. So yen, I shared this with you guys last week. Now we should expect a reversal on yen. Should expect a reversal on yen. What do we have on yen first? This is okay. Let's start with the weekly time frame. So last week was strongly bullish, strongly bullish. And you would agree with me that after this strong bullish candle last week, you can't be buying yen. You should expect a reversal. You can't buy yen, right? Because this is like overbought. This is like premium, right? If you apply your Fibonacci from this swing high to this swing low, price is at a premium area. And at a premium area, you are not expected to buy. Okay? When you apply your Fibonacci will be done from this swing high to this swing low. Yeah, that's the previous range. This was the previous range. This swing high, this swing low. This was the previous range. Price was supposed to just pull back to a premium area, which will be around this area before it said. But what happened? I think it went up to sweep the liquidity residing at this previous high, because this high, this movement here was used to come fill this fair value gap. This movement here was used to come fill this fair value gap. Can you see the fair value gap here? Okay, this fair value gap is created here. This buy was to go and fill that fair value gap. And they know after the formation of this pattern here, we had a spinning candle and we had an engulfing candle. After the formation of this pattern here, they know most retail traders, this is an engulfing pattern for retail traders. And this is a spinning candle. The most retail traders who have executed sell and their stop losses will be at this point. ICT students, those who use ICT smart money concept, would have executed sell also because a gap has been filled, a fair value gap has been filled, fair value gap at the premium has been filled. So a lot of traders would have executed sell and their stop losses will be at this high. I believe that is the reason price went above the premium to sweep the liquidity residing at this previous high. And after sweeping liquidity, what do we have here? Last Friday candle closed as an angry man. It closed as an angry man. So if today's candle closes bearish, you have no business buying the yen. Okay, if today's candle closes bearish, that will be a strong confirmation for a bearish yen, and yen might come sweep this relative equal low. First is to come and fill this fair value gap. If it breaks out from this fair value gap, then it's likely coming to sweep that relative equal low. So my bias for the yen this week is bearish. Okay, now if today's candle closes bearish, a resistance will be created, right? A resistance level will be created here. So only consider buying if that resistance is broken. If the resistance, that is, if today's candle closes, this level is not a resistance yet until the close of today's candle. If it closes bearish and a resistance forms, we would only consider going bullish if the resistance is broken. So once today's candle closes and it closes bearish, we should be considering selling the yen. I hope that is clear. So let's just go to the chart. If there's any pair you want me to analyze, let me know. If there's any pair you want me to analyze, just drop it in the comment section. I'll take your questions. at the end of the class. Mr. Summer, good morning, sir. I can see you, sir. I can see you. So let's go to the charts. Good morning, sir. So
Good
let's
morning. Good morning, sir.
So we're looking for bearish, bullish dollar. It means we should be looking for sells on the, what's it called? We should be looking for sells on the GBP USD. We should be looking for sells on GBP USD. So what do we have here? We have bullish and we have discount, bullish discount. Why is it bullish? I think there was a gap. Let me start. Yeah, you can see there was a gap here. This was the first candle for today's market, right? Yeah, this was the first candle for today's market. So for GBP USD, I would advise you wait for today's candle to close before you take a trade. Okay, wait for today's candle to close. There was a gap this morning. The market opened below the price it's closed. This was the price it's closed. It opened below it, so there was a gap. So I would advise you wait for today's candle to close. I expect that by the end of today, these buyers will change to bearish. Okay, wait for today's candle to close. Once it changes to bearish, then you can sell. Wait for the buyers to change to bearish before you take any trade. Before you take any trade. I hope that is clear. Before you take any trade, don't take any trade on GBP USD today. Don't take any trade, please. Wait for this to change to bearish before you take a trade on the GBP USD. Okay, so you can see the pattern we had here in the weekly time frame. You can see we had a shooting star and the next candle closed bearish. This is a bearish pattern. This is a bearish pattern, and you can see the buy. The buy started from this point. And I said when the market has moved in one direction more than 100 pips, don't take that trade. It has done over 100 pips. Even from this point, it has done over 100 pips in one direction. So this is not the right time for you to now start looking for buys. I hope you're getting it. You can see from this point to this point is over 500 pips. This point to this point, let's see how many pips that was done. 100 something pips. So please wait for today's candle to close. When there's a gap like this, I always advise you wait for a day candle to close before you take a trade, please. I hope that is clear. Euro USD. If you want to take any trade today, let's see Euro USD. Okay, you can see Euro USD. If you want to take any trade on Euro USD today, it should be sell. Euro USD is bearish. So if you want to take any trade, instead of going for GBP USD, you can go for Euro USD, bearish. But you can see here on Euro USD, remember I said when the market has moved in one direction over 100 pips, you can see Euro USD has done from this point to this point, close to 100 pips. So in this case, we would love to see price do a reversal of, let's say, 43, between 43 and 87 pips. Okay, so if you want to sell USD, you might wait for price. You can see there's a gap here that has not been filled. Okay, and if you calculate the number of pips from this point to that point, let's see. You can see from this point to this point, you can see it's between the range of 43 and 87 pips. You can see. So we should expect a reversal. A reversal to sweep all this liquidity we said at this previous high. So you can see from this point to this point is about 45 pips, which is the ATR half value. Okay, so Euro USD, if you want to trade Euro USD today, you should consider selling. I hope that is clear. I hope that is clear. And for GBP USD, if you want to take the trade on GBP USD, though this has not changed to bullish, if I want to trade GBP USD, what would I do? This is the daily, what's it called? Daily candle. That was last Friday candle. All you need to do is just get the average price. And the average price, this is it. Here's the average price. This is midpoint. Yeah, this is the average price, 1.3636. If a 4-hour candle closes below that price, you can risk selling. I hope you're following. If a 4-hour candle closes below the average price of last Friday candle, which is this 1.3636, you might consider selling. okay, or wait for the daily candle to close. So tomorrow, that's when you would execute a trade. Are you getting me? Are you getting me? So that's it for Euro USD. Euro USD is bearish set for, and Euro USD JPY. USD JPY, don't want this video to be long. So what do we have on Euro USD JPY? Bearish. Prices at discount, right? Our focus now is prices at discount. You cannot sell now. Please remember I said if the market has moved in one direction over 100 pips, don't take that trade. Though we have bearish here, but calculate the number of pips. This is where price started selling, and it's where you can see it did over 500 something pips. So you cannot be taking this trade anymore. You cannot be selling from this point because price is at a discount. Price at a discount, please. Once market has moved in one direction by 100 pips, you should not take this trade. And you can see how last Friday closed. It closed as a doji. You can see telling you that the sellers are becoming exhausted, and you have it here that price is what? Discount. Prices are discount. So all you need to do in this case is to wait for the buyers to change to bullish. Once the buyers changes to bullish, you start buying. Price already had a discount. It has done over 100 pips. So you are not interested in selling. You should be looking for buy. So all you need to do is wait for these buyers to change to bullish. Hopefully by end of today's candle, at the close of today's candle, the market, the candle is likely going to, the buyers is likely going to change to bullish. The buyers is likely going to change to bullish. Now, if you don't want to wait for that to happen, it's best you wait for it to happen. But if you don't want to wait for that to happen, all you need to do is what? You can see the, what's it called? The average, this is the average price of this previous candle. Average price of it. If the 4 hour, let's say 4 hour candle has closed above it. Okay, this 4 hour, you can see the pattern we have here. You can see this is a bullish reversal pattern. Can you see that? So we had a spinning bottom and we had an engulfing candle. This candle engulfed it. This is a bullish reversal pattern. One can start buying. Okay, one can start buying, but calculate the risk. Let's see from this point. Let's see from this point to this point. This is where the buy started from. It has done over 50 pips. In this case, I would love to see price. You can see it has created a fair value gap here. So I would love to see price pull back. You can see we have one fair value gap here. We also have another fair value gap here. I would love to see price pull back. In London session, it's likely going to happen. Price is going to pull back because a lot of retail traders would have jumped in and start buying now. So price is likely going to pull back to fill this fair value gap or fill this fair value gap before going bullish. So USD JPY is set for buy. Or you could wait for today's candle to close bullish or wait for their reversal to occur before you buy. It's already set for. It has given us a pattern indicating changing trend now, bearish to bullish. But you wait for the buyers to change to bullish. Okay, wait for the buyers to change to bullish before you buy. Now, in this case, since the buyers has not changed to bullish and you want to take the trade, you have to risk less. Hope you're following. You have to risk less. You don't take much risk because it has not confirmed yet. The buyers has not changed to bullish. So if, let's say, you want to risk $50 on this trade, you can risk maybe between $15 and $20 on this first trade. Once the daily buyers closes bullish, or the buyers changes to bullish, then you can execute with the remaining $30. That is how I manage trades. Okay, so CHF JPY. Okay, I'll look at that in a few minutes. JPY. So here's JPY. Which other pair should we look at? Okay, let's look at gold. Gold. I shared this last week. Was it on Friday or Thursday? Most of you didn't join the class. It was only Mr. Collar that joined the class. I said we should look for sell on gold. That was the to look for sell on gold. So today is let's start with the weekly time frame. So we had shooting star Amaye. Okay. Then if you go down to daily. So today's market, there was a gap, right? This was here the market closed last week, Friday, and today the market opened a few pips below that gap. It opened a few pips below that gap. So long term, just as we have it here, gold is bullish. Gold is bullish long term, but if you go down to 4 hour, let me point out something on 4 hour, you can see gold just filled this gap. there was a shift in market structure at this point, and gold just filled. You can see this buy here was used to fill this fair value gap. So it's just to fill the fair value gap. So if today's candle closes bearish and the bias changes to bearish, you should look for sales on gold. Okay, you should look for sales on gold, but this bias needs to change to bearish. I feel gold will still come and sweep, take these lows. That is what I see playing out on gold. I feel gold is still going to come and sweep this low, because if you apply your Fibonacci from this swing low to this swing high, I think, okay, just hit Fibonacci 50% level, and there was a retracement from that. But I think we still have a fair value gap here that has not been filled completely. So they might want to use this low as liquidity. That's what I see playing out on gold today. Okay, that's what I see playing out on gold. Now, after the sells, if the daily, after giving us a bearish setup, if the daily now changes to bullish, if the bias now changes to bullish, then you should be looking for buys. If the bias changes to bullish, that is after today. Okay, maybe after today we'll have a bearish setup, you sell. Okay, then if it now changes from bearish to bullish, you look for buy. So I hope you're getting me. So for gold today, you might want to avoid trading gold today until the bias changes to bearish. I would not advise that you buy gold from the current market price. Let's see a little reversal to the downside before you take a buy. I hope that is clear. So lastly, we'll look at CHF JPY. If there's any other pair you want me to analyze, let me know. CHF JPY. CHF JPY has been, I think it's been bullish. CHF JPY has been bullish. You can see CHF JPY has been bullish. It has already moved. Okay, so let's start with the daily. Okay, so this was supposed to be bullish today, but you can see that the market opened far below the price it closed. That's the reason there was a gap. Okay, when there's a gap, so it's closed here, and it's what? It's opened far below it. You can see this is over 62 pip gap. 62 pip gap. You can see that's why it's giving us a bearish bias here. It's opened. Normally, if you had look at the midpoint, the average price 198.80, and you can see that if the market had opened at the price it closed last week, what we will have is what is bullish. But because there was a gap, it opened far above the average price. That's why it gave us a bearish setup. Normally, the market was supposed to open at the price it closed. So if it had opened at the price it closed, what we would have here is a bullish bias. You can see it's a bullish bias, and you can see that it has been buying. It has been buying. Also look at the pattern we had here. These are bullish reversal pattern. We had an inverted hammer bullish, and also we had an inverted hammer here bearish. So this is a valid bullish reversal pattern. These are valid bullish reversal pattern. And if you go to 4-hour time frame, you can see the pattern we had there. We had an hammer here. You can see we had an hammer here indicating change in trend from bearish to bullish. So CHF JPY is set for buy. It's set for buy. So from this point, I think it has done over 100 pips. You can see it has done over 100 pips. So you shouldn't be the one taking the trade at this point for buy. You shouldn't be the one taking the trade. It has done over 100 pips. So what do? You wait for a reversal. Okay. You can see it has created this fair value gap. If you want to take a trade on CHF JPY, patiently wait. I'm very sure it's going to pull back to this area. It's going to pull back to this area. That's the fair value gap. Let's see if there's any fair value gap below that. Is there any other one? There's no any other fair value gap below that. So there's a high probability it's going to pull back to this zone. This is where you should be considering buying CHF JPY. Okay, wait for a retracement to this area. Then if you are buying from this point, see your stop loss should be the low. Stop loss should be the low of this candle, which will be like 60 pips. Then do your calculation to know the lot size you would apply on the trade. Okay, my high is on CHF JPY. I think that's where I'm going to be trading today or this week. I'm going to hold the trade from Monday. If I see a good setup, if it goes back to this zone, I'm going to hold the trade to maybe Friday. I'm going to hold the trade So maybe Friday. So I'm expecting it to come fill this gap. See this gap here. Okay, this gap here is about 200 and something pips. So that will be my target for the week. That will be my target for the week. Okay, so you either wait for price to pull back to this area for you to join the bullish move, or patiently wait for the daily candle to close. Once the daily candle closes and the buyers changes to bullish, we'll start buying. Though today the buyers are supposed to be bullish and not bearish, but because of this gap, the buyers are supposed to be bullish, but because of this gap, it's now give us a bearish buyers, which is not correct. Okay, which is not correct. It's supposed to be bullish, but the gap is the reason for this bearish buyers. I hope that is clear. Any question? You can just unmute your mic. If you have any question, unmute your mic. If you have any question, unmute your mic. Any question, Mrs. Chibuzo? Any question, Mrs. Chibuzo? Mr. Sam, do you have any question?
Good morning, sir, and everyone in the class.
Please let me hear. Hold on. I think I can't hear you. A few minutes. Let me unmute my speaker.
Okay.
Okay, Mr. Ozoma, you have any question?
Yes. Good morning, everyone.
Good morning, sir.
When you mention yen, you don't always mention the pair. So I'm always confused when you mention yen. Is it
When I
all
say
pairs?
when I say yen, when I say yen, when I say yen, if I say yen is
Yes.
bullish, if I say yen is bullish, it means
Yeah.
if I say yen basket is bullish, it means yen is bullish. Now, if yen is bullish, if you want to trade CHF you are going to sell it. You are going to sell CHF if yen is bullish. If yen is bearish, if yen basket is bearish, it means you are going to buy JPY pairs.
Okay.
You get it, sir?
Okay, I understand now.
When I just say
Thank you.
yen, I'm referring to yen basket.
Okay.
When I say yen, I'm referring to yen basket. So if I say yen is bullish, it means you should look for sales on JPY pairs. And if I say yen is bullish, we should look for if I say yen is bullish, we look for sales on JPY pairs. If I say yen is bearish, we look for buys on JPY pairs, because on all the JPY pairs, yen is the counter, is the second currency.
Yes.
Yes. So
Yes. Okay. Thank you very much. Thank
you're
you very
welcome,
much.
sir. Ms. Chibuzo, do you have any question? Any question?
No.
All right, all right. Mr. Sam, do you have any question?
Yeah, good morning. No question.
All right, thank you for your
Actually
time.
following the trend. Yeah.
All right.
You're
Thank you.
welcome.
Thank you for your time. I wish you all a great day. Bye for now.
Thank you so much.
Thank you.